All right, so the SPYs continue to consolidate in a tight range. After topping out here at 239.5, there had been some selling a couple times into the 238 area. Then yesterday we compressed even a little bit more. So this price action is a little bit different than the small caps. The way I would describe it is a tight consolidation just below the all-time high. I think people who are buying on these flushes close to 238 are in a good position. If we have a break above last week's high, if we step back and look at the daily, so here was the Trump top at the beginning of March when he tweeted how great the market was since the election. And now we are 2 months, exactly 2 months past that. So market's kind of had time to digest this move here from 230, 239. So one of two things could happen if we get a break to the upside. You're either going to get just a move with a close above 239 and then follow through the next day where we get that move into the 240s. Or the more difficult scenario, I think for some people, would be where we just take out 239.5 intraday and keep on going from lower levels. It's always tough for people to jump in when the move starts from lower levels. But if you get a close above 239, and then intraday you have a break above the 239.5, people are more comfortable. But regardless, what we have is a market that pulled back in March, did a higher low in April, and now is just consolidating right at the all-time high, which cannot be described as bearish, to say the least. IWM, as I said, is a little bit different in the sense that we've had this great horizontal consolidation range where it was like 138.5 down to about 133.5, 134, and we moved up here in the beginning of February and looked like we might break through. We didn't. We came back down, tested the bottom of the range. We gapped above, took out this little high here, and came right back down in. So I guess now you would describe this as we're consolidating in this little area right here. I think the thought process for some was the size of this move here after topping out at 141.5 for a couple of days. We came all the way back into 139. Was we could move back inside of this bigger consolidation. But yesterday when we flushed through the prior day's low, we moved right back up here. So until you see a close below 138.5, this also has a shot at breaking to the upside. If we got a 30-minute. All right, so with a little double top here, sold off from 141 to 139. I guess what I would use is the levels we were using the other day for the breakdown here. So 140.50 to 140.80. If we get back up into this area here, see how it acts. My first instinct would be to look for it to get rejected in this range right here. But if that doesn't happen, you should be, very mindful of the increasing probability for this to also move to higher levels. But right, this area right here. Okay, a bunch of stuff to cover, so we might move through a little bit quickly. I do have the chat open in case there's a question about something. So let's start with THC. So THC, they beat on the EPS. They guided in line. It seemed like it was kind of a one-time thing. A little bit surprised by the size of the up move. So then we go to the daily. We're like, okay, this up move seems a little bit too big. Where are we? How beaten down is the stock? Because sometimes the initial move is bigger than you expect, but the stock might be beaten down a lot. So people will feel like the bottom overall is in on the fundamentals, so it's time to jump back in. In this case, it topped out here in 2015, around 60, and did come off 75%. So So after bottoming, it had rallied back into the low 20s. It looks like here there's a little bit going on in the 19 area. And here, here, here. It spiked above this day in the 219, failed. And then 18. I guess the gap this morning, the bid 17 and a quarter. That's it, above the 17. It's gapping to right in here. Did I put 17 and a half on the sheet? Yeah, okay, so in the daily, 17 and a half, there was resistance here for about a week before it broke down to the lows. So I would play it in either direction, but I'd understand that if it's holding below 17 and takes that 1680, it wouldn't surprise me if it had a pretty deep pull in. Let's use this 17 where the initial move took it up here. It held here a couple of times in the after hours. And then we said 17 and a half was resistance. If it takes that out, 18 is the next logical spot. If it ends up closing today above 17 and a half, I'd be a little bit more bullish on it overall. Up $2 right now at 17 and a quarter. Next one is IAC. I put this one on here. This is not a stock that I've traded that often in the last few years, but it's such a large gap that there could be a nice multi-point setup.
Yeah.
Here's the daily. And also we see that it ran up. Where are we? So it went up from 76 to 84. Now it's gapping up to 94. So what is that? 18 points. It's over 20%. 24%. Just doing a little math in my head to wake myself up. So it's been in a really nice uptrend. Now it's moving away, it's getting extended there. So we do have a potential sell the news profit-taking situation. From what I saw in the news, they were getting bid up on their bid for Angie's List. So let's take a look, see if we can spot an area for potential failure. 100,000 shares, it's not really enough for us to...
Let me give it a shot.
So far 94, 94 and a half. I guess the way I would look at this is on the open, if it fails in the same area here and then it's holding below 94, trade it on the short side and see how deep of a pull in you can get. These things happen in stages. Just like take a look at Netflix, take a look at Amazon. You'll get your first failure in the pre-market. It comes off to some profit taking, weak rally. Then you get your second leg, sometimes a third leg. Obviously, if there's a shallow pull in on the open, it only goes down into the 92s. Very quickly is back up above 93 and a half and holds. That would be kind of bullish for it. But you need to be careful until it's kind of holding above the pre-market highs.
So yeah, those things.
Coach, COH. So let's go to the daily. I think the daily is relevant on this one as well.
I'm just curious to see.
It looks pretty good on the daily. So here was the downtrend. That could just continue. I guess you could say it's been a few years that it's pretty much been spent most of its time between 43 and 33 in this 10-point range. It did try to, it did bear flag here. But then it broke right back inside of the range. It didn't break to the downside. So we're gapping up this morning here. The reason I said on the daily looks pretty good to me is it's in this downtrend. It puts in a low, it rallies back up, and then it comes down, it kind of holds the prior. It looks what they call is, some people call this as a reverse head and shoulders. The head, the shoulders, and I guess this is kind of the neckline here. It closes above, I don't know, this area here, and you got to move back up to 55 or something. All right, so 41.5 is the spot in the pre-market. What I put on the sheet, 30. So if they flush it down on the open, 39.5 to 40 is where the first. We've had some good luck. Remember, I think it was last quarter, 2 quarters ago, we bought this in a flush, and I think I was long it for 3 days after that or something. It went up a lot. So it's treated us pretty well. So definitely, if you don't want to trade something a little bit wilder, I'd move that up to the 2 slot or even the 1 slot versus THC. The next one is EXEL. And this one's in a really strong uptrend. And so when you look at an uptrend like this, you want to see, all right, how much time did it spend consolidating near the highs, because it's gapping above that. That gives us an idea of the likelihood that it can hold the gap. So February, March, April, May, 3 months. The good thing about it is, though, you got people in here, it broke down, people bought at 20, it tested 20 again, and then people were started to accumulate it between 21 and 22 before coming in, and so it was set up pretty good for an upside break. Oh, and the good thing is also they crushed the revenue number by over 20%, so that sort of thing is what you usually want to look for in something that's up this much, to hold the gap where people would step in at higher prices. So I got 23.35. So yeah, the first real support is down here near the these prior failure areas, 23.35. If you want to be a little bit more aggressive about it, trying to catch a move to $25, I would say in the 23.70s you could take a look at it. And if you don't get that pulling and the first move is to the upside to 25, you could look for a failure there, just whole number, big number. But after 10 o'clock, if it's still in the 24 area or higher, you would look for it to continue to higher prices. AMD, this looks pretty bad to me. It's already down. Here's the daily. So if we look at it, it ran from $6 to $12, then it came into 10. I think we got involved here somewhere in that area, if I recall. And then it gapped to $11 and just had this amazing run to 15 on the fact that maybe they had some graphics chips, like not only were their computer chips good, but their graphics chips like in NVIDIA, NVIDIA, and that kind of caused it to go up to 15. But then it put in a lower high here and started to move sideways, and now their guidance was not good. And so it's actually below this 12 already. Really comes down to, is their guidance bad enough to bring it back down to, I guess, this last quarter's gap up to $11. It seems like it is. You do have some people who are buying it and it's pulled back to the 12s here, so they're going to be motivated to sell. That's my first thought, is can it come back down to where the up move started on the good numbers last quarter? So far in the pre-market, the lows here are 1170s. So if we get some sort of pop on the open to what I put on the sheet, 1250, even a little bit lower than that, like in the 1230 area, 1230 to 1240, I would look to get shorted for kind of what it's doing right now, a test of the pre-market low. And if it takes that out, you'll look at 1150, and then obviously the move last quarter started from 11. So that, and it's very liquid, so anyone can trade it. The good thing about it, it could move it to have a dollar plus range today. Normally moves only 44 cents. So you can trade with as much size as you want because of the liquidity, and it looks like we could get a pretty nice size move, at least in the first hour or so. The next thing is Twitter. We talked about this the other day when it gapped up, that it could just keep on catching bids and grind very slowly higher. I think we're starting to see that a little bit. It grinded higher a few days ago, then it moved sideways. It caught the Bloomberg news, had a quick pop in the morning to 1760, pulled in a quarter or so, but grinded higher at the end of the day. It's getting pretty close to levels where it could top out short term into the 18 price. So, if you see it this morning, kind of come up here and you want to fade it or move back into the downtrend, into the uptrend, that would be okay. Next thing is Starbucks. Starbucks we just talked about, could it sustain over 60? It did that all day yesterday. So, the longer it stays above 60, the better chance it has of making a run up to that 61.5 resistance. The next thing is Microsoft. I only traded for the first 45 minutes or so, I think, yesterday, and I did flip my bias too long because it had rallied back up strong in the afternoon, and it was holding above that 68.60 we talked about in the morning meeting. Unfortunately, I had my stop a little bit too tight, and I was off the desk from 10:30 to 3 or something. So I missed this, but hopefully some people caught it. Just using the prior day's resistance here and here and then here, it started to consolidate above that. It went down a couple times, and I think that's where I got stopped at, unless I put a trailing stop and it moved higher and got squeaked here. But pretty much, once it got above 68.75-ish, it was very clean to 69.40. That's a big move for Microsoft. So it's at all-time highs. Buyers are in control. If we're looking at it today, have alerts down here, 69.40 to 69.30 in this consolidation from after the morning run up. The next one is WDC. I put this on here just because I just wanted to show you something. So there was this profit-taking move on day one, and it came into those lows yesterday as well, and it held. Didn't have as much of a bounce, but it's now getting tighter. So if we're lucky enough, we'll get maybe another day of just more tight consolidation and then a break in either direction. I would lean towards probably slightly higher chance of breaking to the upside. But either way, and have alerts at 88, 88.30, 88.60, and 89. That would be kind of the upside break. And if you get involved and you get a close at 90, you're in the driver's seat for a test of these highs after earnings. If it can't get above 88 and it's below $87, it sets up for a test of this double bottom here. And if it takes that out, what you could be looking at is a move all the way back there. X. I put on X here, but this one got crushed the other day. Then it had rallied back pretty strongly. From 22 to 23.60, kind of where it had trouble on day one. And then they got a couple of days of selling again. It's really beaten down. So we want to keep an eye on this. We talked about the possibility that it could go to 20 if they didn't catch a bid here in the 22 to 21 area. Yesterday, put in a new low since the earnings, 21.5. But keep an eye on this. You see it holding above 22 and then gets above 22.50. That would be a pretty good setup for a move back up to 24, 24.5. If it's holding below 21.60, 21.50 area, you know what to do on the short side. So got off to a late start today, and we're finishing late, so we'll wrap it up. As always, be patient and good luck.
Hope you enjoyed that video. You can actually watch that video if you're subscribed to our Trader 90 before the market even opens. What stocks are in play? What levels in those stocks are important, and how we might go about attacking that stock. That's Steve Spencer, 20-year veteran trader, laying it out there every morning before the market even opens. A really, really powerful tool to start your session off on the right foot. So right now we're offering a trial that you can take advantage of to access this meeting and other meetings throughout the day. We have a meeting at 11 a.m. Eastern where you can sit down with Mike Bellafiore and listen to him talk about what's going on during the morning session, what stocks were in play, what the best trade opportunities were, as well as maybe some things that we're looking at heading into the afternoon session. So I really encourage you to take advantage of that trial.